Bitcoin long-term holder supply has fallen to a cycle low. At the same time, the price found support near $82,000 and began to recover. This combination raises new questions about market strength and the balance between buyers and sellers. Long-term holders are investors who keep their coins for more than 155 days. Their supply peaked in July and declined steadily through November. It dropped from 14.77 million Bitcoin to 14.33 million Bitcoin. This decline suggests that patient holders have been selling into the market throughout the year. The sell-side pressure kept the broader market capped during 2025. The correction from the peak to the local bottom reached 36%. Now the long-term holder supply appears to be stabilizing. This may signal that the wave of distribution is slowing. Some analysts believe this shift reduces immediate downside pressure. However, the picture is more complex. Technical analyst Axel Adler Jr. points to diverging indicators. He notes that the overall bullish structure of Bitcoin is intact, but short-term momentum has weakened. His bull index rose to 23%, while its fast version slipped to 18%. The gap between them reached minus 5.28 points. According to Adler, this is the first signal of its kind since the start of the month. Divergences like this often come before corrections or phases of consolidation. They indicate that short-term drivers such as funding levels, taker imbalances, and spot exchange-traded fund flows are losing strength faster than medium-term market structure. This weakening is happening just as the market looks toward the December Federal Reserve meeting. Traders assign an 85% probability to a rate cut of 25 basis points. If the decision deviates from this expectation, short-term momentum could drop below zero and create fresh pressure. A softer stance from the central bank, on the other hand, may push the indicators back into the positive zone of 25 to 30%. Adler describes the current market as tactically fragile. He argues that increasing risk exposure is unwise until short-term momentum improves. Maintaining core long positions while avoiding aggressive moves may be the more balanced approach. Another analyst, known as Mr. Crypto, highlights the emotional state of the market. He notes that sentiment has reached what he calls maximum fear. Historically, extreme fear can sometimes align with local bottoms, but it does not guarantee immediate recovery. All these elements form a mixed narrative. Long-term holder supply is stabilizing, which is supportive. Short-term momentum is fading, which is cautionary. Sentiment is fearful, which can be either a warning or an opportunity. Investors are watching closely as Bitcoin trades above $91,660 with a modest daily gain. The next key catalyst may be the central bank decision. Market structure could shift quickly depending on how expectations line up with reality. For now, the data indicates one thing clearly: the market is transitioning from a distribution phase toward a period of uncertainty. Whether this leads to renewed strength or deeper consolidation will depend on incoming signals,